Hello everyone, today we're going to talk about TimeView, which just received a major update. It's a powerful tool, but we know it's sometimes misunderstood and therefore misused. So, before showing you the new features, especially the new forecasting tools, which are the real star of this version, we'll go over the basics together. 2 minutes, no more, but it changes everything for what follows. All right, let's go. Let's look at this in detail. So, to find the time view, you'll naturally go to your section, Finance, and to your section, Calendar. So, the first very important thing to understand how it works is that here you find exactly the view of each income and each expense from your database, which is assigned to a month and a year. That's really exactly how the financial calendar view works. These are two tables that are projected into a calendar, organized by month, that's all. Second thing, it's a place where you can have some fun, meaning you can click wherever you want. It doesn't change anything, it doesn't write anything to your database. You can change the currencies as you wish, add the number of tools, and we'll see what that looks like later. As you wish, change to mono-host, multi-host, change the year, and so on. Just a small change here regarding the year. You see that we have the option to change the year, but above all, we have the option to search starting from the year. Here, I'm in 2026, so I have my table for the year 2026 from January to December. But if I choose 2024, then it will be starting from 2024. And so I'll have here, if I click on the search button, I'll have my year 2024, my year 2025, and my year 2026. So it's really a view, for example, over 3 years. Second thing as well, as usual, you know by now that we work a lot on our indications here. Every time you see a question mark, don't hesitate to open it and you'll have the exact information on the calculation method and how it works on each point. If you want to see, for example, your margin principles, well, how the logistics margin calculation is done, how the global calculation is done, and so on, etc. You can go and see right away what it looks like, always via this question mark and the information you find here. So now, to go back to this principle we talked about at the beginning, which is to say I have a tourism income that appears here. It appears in the month of January 2026. The question is, how is the tracking done? We talked at the beginning about the information that interested us. I'm going to switch back to dollars. To have a precise view, it's simpler. We have round numbers. Here I have $10,000. If I want to understand how it works, I'll simply go and look here. I'll go to the group screen to get a visual. I'm going to select my view directly here for January 2026. What does that show us? Here I have all of my groups for January 2026. Here you can see the different totals that I'm supposed to receive, theoretically anyway. We'll see later if there are small differences. I have my total here. And you see the sum shown in the financial calendar is indeed the 10,000. What does the 10,000 represent? It represents the various receipts. So they are indeed part of this receipts database, meaning that here within a group in my financial section, I have two receipts. I'm definitely in the receipts database, which are assigned here. We have a total of $5,000. The receipt is assigned to a month, meaning if you enter your receipt, today is July 10th, 2026. In your financial view, you'll have a view that will be broken down for the month of January 2026, which matches the date of the first day of this group strip. So you see the logic. If I have expenses here, if I have a cost, regardless of the date the expense is recorded, it could be recorded here on July 10th, for example. Well, it will always refer back to the month and year of the trip, so you understand the principle of the breakdown. The first example I'm giving you covers 95% of your business since it relates to groups, your incoming agency business that you'll record directly in groups with receipts received. So we're really looking at your business, your core business. But as I explained at the start, if I go to my finance tab, it's really a breakdown of this database that corresponds to a specific group. If, for example, I record here to stay with January, this is a test for January, I record the receipt that isn't assigned to a group or necessarily assigned to a travel agency. Let's say you have a receipt here for 5,000. it's not going to be categorized. I'll do that on purpose. You see that by default, whenever you work in either receipts or expenses, on today's date, it's July 2026, I'll automatically have the month reference. We are currently in the month of July 2026, but I can absolutely say no manually. It's a receipt that belongs to January 2026, and so in my dollar breakdown of $5,000, automatically, when I go to check my financial calendar, I'm going to have a new receipt, a receipt that won't be categorized, for $5,000, and it will be linked to my month of January 2026. So you see, manually, from the moment you enter a receipt, whether it's either in receipts or in expenses, every line you create will refer always in the same way to a month and a year, and it will therefore be automatically broken down in the same way. So we find here in our financial calendar this view that interests us with the amounts we've actually received recorded in our finance database. The same principle for all your expenses. You've got the idea. Note here that by default, if you don't use the financial calendar, everything considered a cost of sale corresponds to a group's logistics cost, which allows us afterwards to calculate the logistics margin. If I look specifically at our example here, I have 4,030 in expenses linked to logistics services, hotels, transport, and so on. Here I only have one category, but you can create as many as you want, which will depend on the cost of sale. I won't go into detail, it's entirely possible. If you have any questions about this, don't hesitate to ask me and I'll go into more detail. And so here we have 4,030 in cost of sale compared to a receipt of 10,000. So I'll immediately have my operating margin, which is 60%. If I look at my global margin, well, we're going to take all our cost of sale principles and we're going to add here all the expense categories you've added for human resources, for your rentals, and so on and so on. And so we'll arrive at a precise result, which will be the global result. Here you have, in addition to your costs of sale, your fixed charges, your salaries, and so on. You arrive at a margin of 24%. I'm going to tell you now about a little something new in the way things are presented. What does it mean, the group difference here? Do you want the answer? As usual, you click on the question mark. But here, I have 266 recorded. What does that correspond to? Well, here, when you look in detail and you expand, you have the bit of loss you can have on different groups. For example, here in the Richard file, I've indicated 266. Well, once again, we're going to go see the Richard file. You see here, I'm in the Richard file. I'm supposed to receive $2,865. I received $2,600, but we'll imagine that behind that, either I have payment fees or I have a rate that changed, transfer fees, and so on. Anyway, you receive $2,600 and you indicate to Tugo that it's fine. I've received all the funds. That means I'll never receive those $265 I'm missing. From the moment you indicate that the group is settled in your financial view, so you'll find the information here about this money that you'll never actually receive. This information shows you the difference between what was expected to be received and what you actually received. And so this allows you to see the situation here to understand how the calculation works. It generally corresponds to 2% of your turnover, but it varies depending on each DMC. And there will be a small update in the presentation to improve this understanding and this information. So that's how it works. Feel free to observe, test it out, and take a look. You know, by default, and this is the same, it hasn't changed, you have the option to view by travel agency category or by head office. Likewise, if you have a question about the head office principle, it's mainly related to multi-host, meaning if you have different travel agencies and want to group them, you can do that using the head office. If you have many agencies belonging to a group that you link to a head office, it will allow you to consolidate the results. Second point here, of course, if you're in multi-host, you'll be able to consolidate either the financial calendar of your own host or view the financial calendars of different hosts to consolidate the information. I'll keep it general for now so as not to get into too much detail and lose you. Moving on to the upper ergonomics section. You know that here you have a possible analysis of your financial activity by Raimundo. And here the option to connect to your Google Drive. It's the same, we've already explained it. The prompt has been improved, but you know the principle here. When you click on Google, you can connect your account to your Drive and export data directly to it. And why not perform an analysis if you're using Google with Gemini, or use the analysis directly integrated into Tugo with Raimundo, who will take the key elements of your activity and generate your analysis. Here's your analysis with all the income, expenses, the margin principle, and a summary analysis. In short, feel free to be curious and take a direct look at the results. You have the option to copy and integrate this financial analysis directly into your documents. We're now getting to the heart of this update. The time view has always had a limitation that we were well aware of. It only took into account actual cash inflows and outflows. So it was impossible to do any forecasting. That's exactly what we're correcting here with the tools section. And so this is the real new feature of this financial calendar. Let's take a closer look. Once again, I invite you to click, add, and check boxes to test the module each time. I'll keep it very general, so as not to get bogged down in details, and if you like, we'll make specific videos for each option. I'll start by adding the first one, making an initial selection of tools, adding the unpaid groups. I'll go back to my example here of 10,000. You see 10,000, I'm in the month of January. I received 10,000, so I made 2 lines with 2 deposits that I have in this group, which generates 10,000. So all that is perfect. But on the other hand, if I look a bit closer here with this new line appearing, the unpaid groups, once again, the little question mark, don't hesitate to check it out. Well, I have 10,144 as information. Well, what does that correspond to? We'll simply take another look and start back from our groups. I'm still in my selection for January 2026. Here I have my theoretical total to receive, so 20,143, 143.52. Here on the right, I have indeed received my 10,000. I made entries here showing that I received these funds, so it's definitely in my expense database. And here I have 10,143.52. That's my theoretical balance to receive. We are indeed, if we go back to the section here in my table, we are in the section for what I have left to receive directly for these groups. So that gives you a direct view of what you have left to receive. Next, we're going to add the credits here. Do you have any credits, things to receive? If I click on the question mark, I have my little bit of information here. These are the credit and debit notes from suppliers and travel agencies that we haven't recovered yet. Well, what does that look like? I'll go check right now. I'm going to open a new tab for you. And we're going to look at the financial part, and I'll check my tab, pending money. And here you see I have my section, credit. What is a credit? It's a post-it note. We're going to create a line from here by saying, with such and such agency, I owe or I need to recover an amount, or they owe me money. Anyway, you note the amount, you can definitely link it to a specific group. And here you're going to put an additional note, or when it's settled, you can say it's settled, it's done. And if it's not settled and I have this amount appearing, it's in this financial part that you have your credit section activated. You automatically find the information and the amounts to be received here. That gives you an idea of the credits, the post-it notes you've recorded in your financial section. Here for credits for pending money. Let's continue the discovery. Here, Interhost. So in what way? Is Interhost interesting? It's just that sometimes you have an agency in your group that owes another agency an amount, and you will see it appear directly right here. Let's continue further. Add expenses and fixed charges here as a forecast. So if I scroll down a bit, you see here you have your expense forecast. This allows you to have a vision of what's next, what the situation is, and so on. How is the calculation done? Well, you can find it right there. It's a projection of fixed expenses, meaning we're not looking here for expenses that correspond to your logistics part. And so it's an expense for the rest of the year. How does it work? Well, we simply take the average of past months to be able to calculate future expenses. We are indeed using an average, and we are in a projection here. We're going to look at a new tool now, and I'm going to look for the new business volume you're hoping for. So here, once again, you're going to play with your tools and your forecasts. I click on it, what does it show? Here you see it's directly indicated. It's what you expect until the end of the year. I'm in the year 2026, and I think, well, it's July. I'll have a business volume I estimate at $20,000, for example. You see it changes automatically here. This additional 20,000 business volume is smoothed over the number of months starting from the current month. I estimate making $20,000 in additional turnover. Where it's interesting is that $20,000 of turnover alone wouldn't be relevant if we don't associate it with a logistics margin. So how is Tugo going to work? You see here I have my revenue part, it's my new estimated business volume. And if I go down here in the same color, I find my new volume here of estimated expenses of logistics expenses. You see, when we created the additional element for fixed expenses, we were missing this projection element for estimated logistics expenses. How does Tugo calculate this automatically? You see that if I look here, I have expenses that are associated, generated, projected, which allow you to know how your year will turn out. If you have a doubt about the calculation method, once again we click and you have the formula. You see, we generate these logistics expenses according to the year's average of your logistics margin. So it's very consistent for a projection. This allows you to have your new expected business volume, but so as not to isolate it, you have your expenses generated directly here, the logistics expenses. Once again, we're talking about a projection. Nothing changes in your databases. This is a playground for you to be able to project yourself. And here, if I click on the comparison, there's a real change here in the comparison with the previous year. In my tourism section, I compare with year N -1, and I see the results right away to see how it looks immediately, line by line. And if I want to go into detail, for example, in my category here, well, I'll be able to see the details of that category. So you really have sliders that will help you get a global view of your activity. The whole point is to play with these sliders to say, well, if I add this much business planned for the end of the year that isn't confirmed yet, if I look at my pending money, if I look at my different expenses and see the forecast, well, you'll be able to get an idea right away. So you understand here the whole point of playing with your tools, right? The translation of the tools is really that. That is to say, we give you tools to play with sliders, to have fun seeing what happens in a given situation, how you'll manage your fixed costs, how you project into the future, how you can analyze your different markets compared to the previous year, how you can go into even more detail. In short, you have plenty of tools. Have fun, make the most of these tools. Once again, and this is the last time I'll say it, it's really read only. So no mistakes are possible. So take advantage of it, test it, have fun, and you'll see it's a very useful tool for managing your DNC. Thank you and have a good day.